Welcome back to Uncle Charles' YouTube channel. Hope you guys are having a great weekend. Guys, we got a situation here on the charts. I have a situation. You guys know I cover SPY, Triple Q, Tesla, and NVDA. Those are the four horsemen of the trading apocalypse that Uncle trades and covers. And we have a situation on all four of those ticker symbols that I cover. I'm pretty sure there's other ticker symbols that probably have similar situation, but I'm gonna cover the four that I cover. I'm gonna stay in my lane, okay? And that situation is a setup called the inside candle setup, okay? All four of the ticker symbols have the inside candle setups, and I am going to, of course, give you guys the trade idea to trade, how to trade, how to deal with the situation, how to deal with the price action, unbiasedly, but bear case, bull case. You guys already know how Uncle Charles does it. But before I do, I need to take the time to explain, and I hope you guys could stay with me here, to take the time to explain the setup and why it's important. Why it's so important for us to know the levels, right? I give you guys the levels. Know the setups, but it's a little bit more, it's more than just knowing the setup. Like, hey, what's the setup? What's the name? You got to actually know that setup and know how to trade that setup so that you can trade it unbiasedly in real time, in the present time. Because everybody wants to try to trade the future, right? You want to trade the future. Oh, the market's going to top or the market's going to bottom. Calling tops and bottoms. But Uncle Charles likes to prepare for the future and trade for the present. Okay, so let me explain the inside candle setup here. Okay, you see the market phases between two phases. It goes between two phases. The trend phase, that's this big old move to the upside here, and then the chop phase, which is likely what we're in currently, the chop phase. All right. In other words, this is called the expansion. And then after the expansion comes the contraction. After the contraction comes the expansion. After the expansion comes the contraction. To put it in my simple terms, the trend phase, chop phase, trend phase, chop phase. The market cycles between those two phases. If you want to be a great price action trader, you must recognize and understand which phase we're in. Because each phase requires a different approach. If we are in the expansion phase, right? And then the expansion phase happened to be bullish. You want to trade bullishly. How did we know this was an expansion phase? If you guys remember, back in early August, we had a rising wedge. Okay? A lot of bear bias traders was thinking we were going to dip. But these wedges represent the contraction. These wedges, flags, wedges, channels, inside candles, they all represent the chop phase. You identify the range, the breakout, or the breakdown level. And whatever the price action breaks out to, that's the direction you want to bet to. So when we broke out the rising wedge to the upside, look at the expansion. And now here we are back in the chop phase, contraction. And we know this to be a thing. We know it is in the chop phase because why? We have the inside candle set up as of right now. We had multiple days where the market just closed relatively around the same area, up and down, up and down. When we were in the expansion phase or the trend phase, the market clearly picked a direction. Higher closes after higher closes after higher closes. And in a bearish expansion, it's the same thing, okay, where the market just closed lower and lower and lower. Now we are in a chop phase. Each chop phase lasts different, right? Some last longer than others, some are shorter than others, obviously. But the most important thing you want to do is identify what makes the chop phase a chop phase. The patterns is what I'm referring to. And in this case, we have the inside candle setup. And once we have the inside candle setup, we need to identify the chop range. Okay, so this is now at this time, this is where Uncle focuses more onto the inside candle setup because that is the setup that we have. Inside candle, like we talk about right here, expansion candle. You guys see the expansion candle or the trend phase. And then we get an inside candle, which is a sign that the market is contracted. Yes. So how do we trade this? We trade it when we break the mother candle. What is the mother candle? Well, the mother candle, if we go to this one, right? The preceding bar is the mother candle. The actual inside bar I like to refer to as the child candle. Does that make sense? The preceding bar is the mother candle, and the actual inside bar is the child candle, because the child candle, the inside bar, is inside the range of the mother candle, aka preceding bar. So how do we trade this? We trade it based on the range of the preceding bar. We trade it based on the range of the mother candle's range. So if we break down the low of the mother candle, we want to look to short. If we break out the high of the mother candle, we want to look to long. Does that make sense, guys? So this is an example right here is what they put. This is the preceding bar, the mother candle. This is the inside candle. You break the range of the preceding bar or the mother candle, you look to long the breakout. If you break down the support of the mother candle, you look to short the breakdown. Does that make sense? Inside candle setups represent contraction. It represents the chop phase. When we are in the chop phase, we need to identify the chop range. This is price action 101, guys. This is the art of price action trading. And it works great with swing trading as well. Okay? So, with that context being said, okay, I hope you guys were able to take in that information and use it. Just another tool under your belt, if you will. Okay? So what we have here is contraction. Inside candle setup. What is the mother candle's range? What is the preceding candle's range? It is 555 to 563.18. I'm going to round it down to 563 because that's my resistance level. So for me, you guys do what you feel is best. I'm just reporting to you guys what I'm doing, okay? For me, I'll be watching the 555 to the 563 range. That means anything in between 555 to 563, Uncle Chartist is staying neutral. That is the chop range. And if I trade the chop range, I will not be looking for home run moves, just level to level. I may or may not leave runners, but I'll be quick to take profits because as long as we're in the chop range, I'm expecting trappiness, and I'm not expecting big moves, and I'm not expecting much volatility. When will I expect volatility and decisive moves to come back? When we break the chop range. When we break the 555 to 563 range. I will have a decisive lean when we can break the range of the mother candles, high or low, based on this setup. In other words, Uncle Chartist is still following the price action. And I know a lot of people are saying that a top is forming, and that is very possible. But the price action must confirm. If a top is truly forming, then support levels must fail. Okay, starting with 560, 557, and then 555. Below 555 will be a breakdown of the mother candle's low. That is when Uncle Chartist will agree, hey, we could be having a top in right now. All right. And that's very possible because we did have the breakdown of this uptrend line and looked like Friday we back tested it. So if this is just a bearish back test to confirm the breakdown, then like I said, those levels that I mentioned must fail and Uncle Chartist will remain bearish. Okay. But I am a sheep. I will only follow the price action and I will not argue with it. That means if SPY clears 563, I will be bullish and favor all-time highs to be tested again at 565. And if 565 clears, guess what? New all-time highs are in play. Up to 567, 570, and I got 571.80-ish as upside targets. Did you guys get that? So now that we know what the inside candle setup is, hopefully we know how to trade it now for SPY. Now we need to apply that same principle to triple Q because we also have an inside candle setup as well. Keep in mind, we did not recapture that uptrend line. So the breakdown is still intact. Now, based on this inside candle setup, we'll need to use this setup to see if there is bearish follow through. Okay, so the low of the mother candle is 473.8. Okay, the range, the volatility, a little bit more higher on triple Q than SPY. Okay, so as of right now, triple Q closed around 480-ish. Okay, so that means it need to break down support. I have 479, 477.5, 476, and then the mother candle's low at 473.8. Below 473.8 is when I would be bear bias in favor of much lower lows. The chop is over in favor of the bears. Now, if we are bullish, then triple Q needs to clear the next fib level, which is at 480.4, and then there's one at 482. Above 482 would also be a recapture of that uptrend line and invalidate the breakdown that we had last Thursday. And if that happens, it's not going to be good for it's not going to be good for the bears. All right, not going to be good for the bears, and more upsides will be possible up to 48, 485, 47, 489, maybe even higher, because we do have a gap all the way at 496 plus. All right, guys, only possible if we recapture and clear 480.4 and 482, especially 482. All right, where is the mother candle's high? Mother candle's high is at 485.5. I did have a resistance level of 485, but I'll change it to 485.5 based on this setup. Okay, so above 482 and 485.5, Uncle Charles would be bull bias. Below 473.8, Uncle Charles would be bear bias. All right, Tesla also has an inside candle setup. The mother candles, aka preceding candles, range is a big one. 210.3 up to 224.8. That is huge. All right. So with that being said, since the range is so big, we got to focus on the levels in between. Okay. Tesla closed around 220.3 last Friday. I did have a resistance level at 220.5 and then 222. Those levels must clear to put 223.5, 225 in play, okay? 224.8, 224.8. I did have resistance around 225, so right around that range. But either way, clearing my 225 level would also clear the mother candle's high. So above 225, Uncle Charles would definitely be bull bias. Now, if we're talking about being bearish, and if a top is in or we're going down lower, once again, we got to break down support. 219, 217.5, and 216 would be first important support level, with 216 being the critical one. That is a fib level. So if bears can break down 216, I would definitely lean bearish, at least all the way down to the mother candle's low, which is at 210.3-ish. Below 210.3-ish, not only would that break down the mother candle's low, but I would break down back below the downtrend line that I had. That would be a hell of a top or a false breakout setup. I would definitely be bearish below 210.3 based on all that context right there. All right, guys. So remember, can't get bearish unless we break down support. 219, 217.5, and 216 is a start. But below 210.3 is when I would definitely be bear bias in favor of much lower lows. Okay, if we're going to be bullish, 222, 223.5, and 225 all must clear. That would also clear the mother candle's high. I would be bullish above 225, 226.5, 228, and 230 plus. Maybe all the way up to 237 would definitely be targets I'd be eyeing. NVDA also have an inside candle setup. The mother candle's range is 123 to 131. That's the range I'm watching. 123 to 131. $8 range. Okay, pretty decent size. As of right now, 128.5 and 130 are the next resistant levels. Now, 130 and 131 are pretty close to each other, which is the mother candle's high. So we can look at it as a zone. That's a sell zone, 130 to 131. But overall, above 131, that's the main level I'd be watching. I'd be bullish if those levels clear. Now, if we break back below 128.5 and 127, then a test of 125.5 and 124 would be in play. But it can't really get bearish unless we break down 123, which is the monthly candle's low. Below 123, Uncle Charles would be bear bias in favor much lower lows. And if we go low, there's be plenty of room to go down. There's a gap. There's a gap all the way back, all the way down at 109-ish. Okay, so if we get bearish, that gap could definitely possibly get filled. All right, guys, let's take a look at the flows. Dark pool levels. This is from last week. SPY had the most activity, 37% though, at 562.3. The other 35% was at 562.31. They're about the same area. Goodness, look right here. About the same area, just 1 cent off. And then another one around 562. So around 562 to 562.3 is where the big money players are getting busy, guys. Add that level or add that zone to your charts. Triple Q, 45% of activity came in at 474.63. Let's see. Right here, about 343 million, guys. It's not even a billion. Not much activity. I'd like to see it over a billion to take it more serious. But that's where they're at. There's one at 479, one at 480.2, 480. So big money I don't know, they're not pouring as much money as they usually will. I'd like to see, over a billion. I feel more comfortable reporting. Now with the individual stocks like Tesla, seeing it below a billion is not a big deal. It's usually how it is, below a billion. But if it is over a billion, we take that very serious. But 96% of activity came in at 220.32 for Tesla. 220.32. Right around, that's actually where they close on Friday. So big money decided to do something at the end of day for Tesla. So at this point, I'd expect a gap up or a gap down based on that, but we'll see how it goes. Let's take a look at NVDA. 129.37. Now that's interesting because I was just talking to you guys about how with the individual stocks, when it's below a billion is pretty standard, but above it, take it very serious. Well, guess what? 86% of activity came in at 129.37. That's $1.5 billion. That's something we take serious. Okay, 129.37. And you see that? According to TradingView, NVDA closed at 129.37. It happened with NVDA and Tesla. These big money players are up to something, guys. They were up to something at the end of Friday. Anyone who thought they went home for the weekend, well, this is evidence that they did not. They were working overtime on a Friday. And they did something. They poured in a lot of money. And 1.5 billion is a lot for an individual stock because it usually doesn't go that high. But today, Friday it did. And 86%. It's a big possibility based on these dark pool. We could get a gap up or a gap down. And with the inside candle setup, guys, I'm telling you right now, wherever the market decides to gap to, that might be where it's going. Of course, it could be a gap and crap. So here's the thing. I mentioned that the range is 131 to be bullish, right? If the market gaps above 131, remember 131 then becomes support. And if you see buying pressure where the market makers are accepting 131 as a buy zone, and you know that to be true, when you get buying pressure and it can clear above 132 or something like that, there's buying pressure, clears 132, okay, boom, buying pressure. That's a bullish sign. So if we gap above 131 and 131 turns into support, that's a bullish sign. And the same thing with if we gap below. If we gap below 123 and then 123 behaves as resistant, that's a good sign that's bearish. We're going to continue the bearishness, gap and crap, whatever you want to call it. Okay, guys? Just keep that in mind. Just a little extra, a little extra tip just in case that happens. Um, and if you struggle, definitely join my Discord because I cover all this stuff throughout the market, throughout the day. Okay, let's move on. Let's move on to the flows, guys. I could talk to you guys about this all day. I'm telling you, but let's take a look at the flows though. Above the ask, I like to see some above the ask. Let me just take out ask. I want to see all above the ask. What are the all above the ask contract doing? Yeah, all expiration. Yeah, I'll take a look at all expiration dates this time. Let me tell you, looking at all expiration dates, all the above the ask, these people are paying more than ask. That's very aggressive because they must really want it. Um, it's more calls, guys. More than double, over 42,000 contracts compared to a little over 20,000. Why is the question? Why is big money more aggressively betting to the upside? Okay, I looked at all contracts, and then we look at the context here. A lot of it is expiring tomorrow. A lot of it has already expired Friday. The puts, though, we look at the puts. There's one for September 20th. That one for 525 strike price, very out the money, above the ask for September 20th. So this person, whoever it is expecting a big drop to the downside, and they entered around 559.5ish, which means they're kind of a little down right now. I don't know if they're down a lot. Probably. Hope they're okay. I'll tell you that. Like, jokes aside, that's a lot of money that they bet to the downside. We're talking over $250,000. So, more aggressive calls. September 6th. There's one for October 31st, 585. That's out the money. It's for Halloween, though. And they entered around 558.5. So they might be up a little bit. I don't know. I don't have too much experience trading out the money. This is really out the money. Uncle's not a very aggressive trader. I'm pretty conservative, in the money, at the money type contract. Here's another call, guys. 570 strike price for September 20th. They entered around 561.35. So they're expected more upside. Okay, now if we take a look at the puts, majority of these puts are either already expired or they expired tomorrow, 560. And they all had bad positions on it. So I don't know what their intentions were. But from what I understand, I mean they entered around 558. They want the price to go down if they're buying puts, and the price went up. And it's expiring tomorrow. So they might have, yeah. Like, this is sad to see because I don't like to see people lose money, man. Guys, like I said, we're seeing more aggressive calls buying. Okay? This is what big money, looking at 100K premiums or higher. This is what big money's doing in the aggressive. I'm only looking at above the ask. Triple Q, above the ask, and it's bearish. This is different from the SPY. Okay, now here's the thing about it though. Calls 32,000 contracts, over 32. Puts quantity is over 24,000. So higher quantity in calls, but it says bearish sentiment because more money, higher money, more bigger premiums went into puts. But the best thing about having cheddar flows, we can look at the context a little bit. Like, okay, if there's bearish, what contracts are here though? Now, if we take a look at the puts above the asks, whoa, boy. Okay, so Triple Q, 480 strike price above the ask. They entered at 480. This was in the money or at the money. This is at the money. It's expiring tomorrow. Triple Q closed last Friday right at 480. So I don't yeah. We're looking at these puts, like I said, August 26th is the expiration date, all above the ask, 480. Triple Q literally closed at 480, so maybe they was looking to buy, maybe something like that, I don't know. Um, this call's expired already. Okay, so this one's August 30th. August 30th, 470 strike price. But they entered around 478.5, so they're down a little bit. They do have some time. These puts are all going to be expired tomorrow. These people are going to need like a miracle, like a gap down. So they're going to need like a gap down. Yeah, so all the calls are also expiring tomorrow. This puts September 20th, 470 strike price. They got time. So I'm looking at the calls. This is interesting ones right here. 500 strike price. September 20th, above the ask. October 18th, 500 strike price. So we're seeing some out the money calls here, guys. So even though it says bearish, a lot of those contracts are already expired or going to expire tomorrow. There are some calls that still have time, but there is a put right here, November 15th, 450 strike price. They enter around 481. Good luck to them. They got time. All right, this is a 465 strike price for October 18th. They entered around 479. So somebody thinks it's a good idea to start entering puts right now. Very aggressive. That's pretty aggressive. So yeah, if I was I'd say the puts are more aggressive for triple Q. So I can see why it says bearish. The puts are definitely more aggressive than triple Q. Even though there are a lot of puts that are expired, but the ones that are not expired, they're pretty aggressive. Okay, so this is this is why I say price action is the shepherd, right? Because if you just go on SPY triple, they go contradict each other. One's bullish, one's bearish. But price action will be the deal breaker, will be the tiebreaker, if you will. Tesla's bullish, all above the ass, okay, guys? 5,000 contracts for calls, a little 2,300, a little over 23 for puts. Let's see, 227.5 strike price for September 20th. I'm looking at these puts, this one a little out the money, 217.5. They entered around 220. August 30th, but then you got the calls over here. So it looks like a lot of short-term positions here that were above the ask. Because I'm just looking at above the ask. You see there are a lot of them are short-term. But the ones that are like August 30th that has time are calls. There is one right here, 217.5, but there's a higher quantity of calls. Okay, I say the bulls is more bullish, definitely. And then NVDA, bullish as far as above the ad, more aggressive. So we got 130 strike price. They got a 129.2, so it's not too out the money. 130 strike price, November 15th. Trying to see if there's anything out the money. Mostly calls here, guys. Nothing too out the money here. Just 130. It's the highest. And then we got some puts here above the actual puts, 125, 125. But they're August 23, guys. August 23, already expired. Bulls definitely more bullish on NVDA for sure. All right, guys. So that is what I have for you guys today. I hope you guys found value in this. If you guys want more content from me and be able to get my analysis throughout the day in real time, definitely consider joining my Discord. I'll see you all in the sheep's den one day. Hopefully, maybe. Peace.